Many traders are wondering why the U.S. stock market isn't soaring after the Senate reached an agreement to reopen the government. I'm going to give you 5 reasons why. But first, you have to know that they were the stumbling block. The Senate was the ones holding the U.S. government shutdown or reopening up. Now that they've approved it, it's going to go to the House on Wednesday, not today because it's Veterans Day, a holiday in the U.S. And then they'll probably pass it quickly, probably within 24 hours, if not even sooner, and it'll land on the desk of President Trump, who will also make it a priority to sign it into law and get things reopened again. Unfortunately, the first reason why the markets are not responding positively is because they're just kicking the can down the road. We talked about this on Monday Market Buzz. You should be attending those meetings, but the bill basically funds the government to the end of January. And the one sticking point that the Democrats had, which was the extension of the Affordable Care Act credits, was not included, but they did agree to have a vote in December. So if the vote does not go well, that means that they're going to shut down the government, or they could shut down the government again. So we're not out of the woods. Number 2, the reopening of the U.S. government actually reduces the chance of a December interest rate cut from the Federal Reserve. Remember, when the Federal Reserve last met, they were kind of wishy-washy, said it wasn't a done deal. But without the uncertainty and more pressure on the U.S. economy from an ongoing U.S. shutdown, this actually boosts the case for keeping interest rates unchanged. Number 3, we've had some fantastic gains in stocks this year, and there's still a lot of uncertainty. Valuations are really high, so investors and traders find plenty of reason to take profits into this move, and they're finding very little reason to buy the rally and to buy the stocks after the government reopens, because there's still a lot of uncertainty. Number 4, it's a holiday, of course. So U.S. bond markets are closed, U.S. stock markets are open, and there's, without the participation of bond market traders, there's less participation in the market in general. And then finally, number 5, the growth story is still a problem. The U.S. government won't be reopened in time for the inflation or the retail sales report to be released, but we all know that growth has taken a big hit from the government shutdown. We don't know how long it will take for those paychecks to come back. We don't know if they can get 2 paychecks or 1 paycheck. I don't know. But there's still a lot of question marks, and there's a lot of bigger question marks related to year-end U.S. growth and maybe even growth in the first quarter. So those are making investors nervous. Keep an eye on gold. Gold is trading higher this morning, and I think that's telling the bigger story, which is that investors are really still cautiously optimistic, but not really that optimistic. I mean, how do you feel? I want to hear in the comments below whether you feel that the U.S. government reopening is going to get you back in the shop spending, and is going to get you spending strongly this holiday shopping season. Let me know.